Hello friends, let us continue with the practical problems on the partnership, right? So let's see the next practical problem. It reads, A and B are partners in a business. Their capitals at the end of the year were 48,000 and 36,000 respectively. That is the capitals at the end of the year. Be careful. During the year ended 31st March 2016, A's drawings and B's drawings were 8,000 and 12,000 respectively. Profits before charging interest on capital during the year were 32,000. Right? Calculate interest on capital at the rate of 5% per annum for the year ended 31st March 2016. Now, I have already told you that interest on capital is to be calculated on the capital in the beginning of the year. What we are given is the capital at the end of the year. So we will calculate the opening capital. How we calculate the opening capital? Let us see. We have two partners, A and B. We are given the closing capitals. We are given the closing capitals. What are the closing capitals? 48,000 and 36,000. Clear? Next we have, now what we do is, whatever items we have subtracted from the opening capital, we add back in the closing capital. Drawings we must have subtracted, so we'll add back in the closing capital. Add back drawings. We are doing nothing but a reverse calculation. Whatever is subtracted, add back. Whatever is added, subtract that. What are the drawings? A's drawings are 8,000 and B's drawings are 12,000. 8,000 and 12,000. Clear? And it says the profits are 32,000. These profits must have been divided between A and B. Clear? Now since the profit sharing ratio is not given, the profits would have been distributed in equal ratio. We will subtract these profits. We'll say profits 16,000 and 16,000. Now what we will get is the opening capital. This is opening capital on which the interest on capital will be calculated. So what is the opening capital? This comes to 40,000 and this comes to 32,000. Now the interest at the rate of 5% will be calculated on these capitals, right? So let us see. It says interest on capital at the rate of 5%. 5% of 40,000, that comes to 2,000, and 5% of 32,000, it comes to 1,600. That's what the question required to do. Calculate interest on capital. Clear? First of all, we have calculated the opening capital because the interest on capital will be calculated on opening capital. Clear? So how to calculate opening capital? We'll take the closing capital and add back the items which are normally subtracted from opening capital. and we will subtract those items which are added in opening capital. Okay, we'll do reverse working. Normally what we do is, we'll take the opening capital, we'll subtract the drawings, add back the profits and reach at the closing capital. Now we have the closing capital, we have to reach at opening capital. So we will add back the drawings and subtract the profits. Clear? And that on the opening capital we will calculate interest on capital. Clear? So you can write this down. Clear? Let's move on to the next problem. The next problem says, A and B started business on 1st of April 2015 with the capitals of 60,000 and 40,000 respectively. So what we are given is the opening capitals already. Okay. During the year, A introduced 10,000 to the firm as additional capital on 1st of October 2015. They withdrew 5,000 per month for household expenses in lieu of profits. Interest on capital is to be allowed at the rate of 10% per annum. Calculate interest payable to A and B for the year ended 31st March 2016. It says, there are two partners, A and B. Right? On 1st of April 2015, they have a capital of 60,000 and 40,000. Clear? Now during the year, A introduced 10,000 additional capital on 1st of October. On 1/10/15, additional capital is 10,000. Now I have told you that interest on capital will be paid for the period for which the business is using that capital money. Right? So what it means, if I say interest on A's capital, what will be the interest on A capital? Right? We'll say opening capital, on opening capital of 60,000, we'll pay interest at the rate of 10% for full year. Right? So this comes to 6,000. And on additional capital of 10,000, we'll pay interest for full year or not? No, we'll pay interest only for half year, because we are using this money. This money is being introduced into the business on 1st of October, that is middle of the accounting period. So the business will pay interest only for half. Okay, right? So it will be 6/12. Right? So this comes to 500. So the total interest will be 6,500. Right? And the interest on B is quite simple, because there is no additional capital in case of B. interest on B's capital, we have only the opening capital of 40,000, 10% for full year 4,000. Clear? So you can write this down. Clear? Very simple points, but important, right? Remember this regarding interest on capital, that interest will be paid only for the period for which money is being used by the business. We will not pay unnecessary interest for the period for which we are not using money, right? Now the partner is bringing this money on 1st of October and we are using it from 1st of October to 31st of March next year. From 1st of April till 30th of September, we are not using this money, so why we are going to pay interest on that? So we'll pay only for 6 months. Clear? Let us move on to the next problem. Now the next problem is, it says Ramesh and Naresh are partners in a firm. Their capitals as on 1st of April 2015 were 2,50,000 and 1,50,000 respectively. Okay, they share the profits equally. On 1st of July 2015, they decided that their capitals should be 2 lakh each. The necessary adjustment in the capitals were made by introducing or withdrawing the cash. Interest on capital is allowed at the rate of 8% per annum. Compute interest on capital for both the partners for the year ended 31st March 2016. Very simple question. We have to just calculate the interest on capital. Let's see. So we have two partners, Ramesh and Naresh. Now the capitals on 1/4/15 are 2,50,000 and 1,50,000. And 1,50,000. Clear? Now from 1st July they decided that the capital should be 2 lakh. So it is from, for 3 months this capital is 2,50,000 and 1,50,000. From 1st of July they changed their capitals to 2 lakh each. Clear? So very simple question. We will calculate the interest. Interest is at the rate of 8%. For these 3 months we will calculate on 2,50,000 and for the remaining 9 months we will calculate on 2 lakh for Ramesh. For Naresh, for the 3 months we will calculate on 1,50,000 and for the remaining period we will calculate on 2 lakh. Because we will calculate on the money that we are using in the business. For the period that money is being used in the business. 2,50,000 is being used only for 3 months. Then 2 lakh is being used for the remaining 9 months. Clear? So you can calculate this interest, very simple. I'll show you one only for one partner. For the other partner you can calculate. Interest on R's capital, right? So we'll say from 1415 to 3615, it is 2,50,000 into 8% for how many months? 3 months. Clear? And from 1/7/15 to 31st of March next year, it is 2 lakh into 8% for 9 months. Clear? This comes to 5,000 and this comes to 12,000. So the total interest is 17,000. Similarly, you can calculate for the other partner, Naresh. From 14 to 36, it will be 1,50,000 into 8 for 3 months, and for the remaining period it will be 2 lakh. Clear? So these are some very simple problems on interest on capital, but the thing is that there are small points which are very important, very relevant from the examination point of view. You need to remember the small points regarding interest on capital, right? Like interest on capital is to be calculated on opening capital and not on the closing capital. So if you are given the closing capital in the question, you have to first calculate the opening capital and then calculate interest on capital. For that you need to know how to calculate the opening capital. Clear? Similarly, the interest on capital is to be paid only for the period for which money is being used by the firm. Clear? So these are small important issues, right? Clear? Some more problems we'll discuss in the next lecture, right?